In our Trader Rundown, Dan Deming of KKM Financial joins me now to kick off our trading week, and always good to have Dan on the show.
Hey, thanks for having me, Angie.
Well, the stock market, as you know, Dan, has been a bit of a snoozeroo.
It has. Summer slumber. Yep.
But things could pick up this week because the Fed heads will be meeting out in Jackson Hole, Wyoming for a big summit. So how does the market view that?
Yeah, I think the market is looking very closely at that. Fed Chairman Janet Yellen will be speaking this Friday. She chose not to attend last year, so I think that's pretty significant in the fact that she is going in this year and has the speech scheduled. The market is getting very mixed signals from the Fed over the course of the last couple of weeks.
That is true.
So there's a lot of indecision on the rate environment moving forward, and I don't know if she's going to clarify it or not, or if she's going to continue to kind of keep that message very indecipherable, basically, and keep the market guessing. But at the same time, there are some thoughts that she could clarify things, and if she does, then the market could react very significantly.
The market has had a great run. I know we had some pullback situations last week, but overall at these levels, what is this telling us about the economy, if anything at all?
Well, I think, the valuations are continue to, be maintained here in this big consolidation pattern. So from a trading perspective, when you see the market have the ability to consolidate something like it has over the course of the last month, after that big run off the February lows, or post-Brexit even,
right,
that, they think that that's typically a strong indication that the market could propel to new highs.
Are there sectors that you would put money into then at that point, or maybe pull money out of? What sectors are you watching, Dan?
Yeah, so I think that there's a couple different areas, Angie, when you talk about that, and you're seeing it kind of play out here ahead of possibly this speech on Friday and moving into the Fed announcement in September. When you look at the utility sector, very strong earlier in the year, given the fact that rates continue to remain very low. You are seeing some weakness there over the course of the last couple of weeks. Even though you're not seeing weakness in the bond markets, the utilities have been backtracking a little bit, and that's considered more defensive in nature. So that's an indication that some players might be unwinding some positions there because they think that the Fed might actually initiate some type of shift in interest rate expectations. Also, consumer staples is another area that's typically defensive. We've seen that also come under a little bit of pressure here.
Lots to watch, especially on Friday. Thank you, Dan.
Yeah, thanks for having me, Angie.